everyone here is really coming at it from an investor perspective, and being a co-founder, actually I'm 7 years invested in my company, Rocket Route. There were 3 of us that co-founded the company. As was said at the beginning, the business is in aviation. The name Rocket Route was all about finding the best route, the fastest route to fly through the air with aircraft. Starting with small aircraft, we've moved up to business jets. Now we're dealing with airlines, and we've been on that journey ever since. As a founder, you don't have the luxury of being able to make 25 investments. You are a portfolio really of 1, and you better be certain in what you're doing. I think that's the sort of learning point that I've taken away from the journey that I've been on. I didn't know it was going to take 7 years. Classic example, you think 3 years, we'll all be on the beach, but we're 7 years in. It's been a fantastic journey. I never knew I was going to go on this journey either. I couldn't predict the journey. The only thing I think, looking back in hindsight, was actually the team. So, everything that Peter said, I resonated with in his presentation. As was said, I'm here to talk about exits. My interesting observation, I know a lot of you have a lot more experience of dealing with exits. I'm going to come at it from the founder perspective. There's a curious relationship, I think, between founders and investors. Sometimes, we have to get on the opposite side of the table, have a really hard set of negotiations, and sometimes we need to hug each other and celebrate successes as well. So I'm going to come at it really from my perspective, thinking about it from a trade sale exit and really the journey from seed investors as well. Before we start, the first seed round that we took 7 years ago was at £36 a share. The last A round that we've done was £260 a share. So there's been a nice appreciation along the way. The seed investors that invested at the start, the majority of those actually exited about 3 years into the investment. There was a change of the board, change of structure. There was an opportunity for them to move out. They got roughly 2 times the return on investment at that stage. And during that role, I'd say the seed investors had a very valuable part to play. I would say that the perception or the relationship was I had needed to feel the pain as a founder, because the seed investor is bringing the money to the company, and that sort of that relationship changed as the business got mature, as the product got more established, as we got more customers on board, as we brought in different investors. That relationship changed, and it was able to sort of get out of the slightly stressful stage at the beginning of spending the money. In terms of my perspective, really I'm coming at it from a trade sale perspective. I can't really comment on listing, other forms of exits as well. In terms of definition of an exit, this is kind of like a simple way to think about it. From a business perspective, there's going to be somebody that's going to approach you. At some point, you're going to sign a sale and purchase agreement, and then there's going to be a post-deal piece between it. Easy, right? Actually, this process, from the approach to completion, could be a year, could be more, it could be less. The steps in between the approach and signing of the legals, you've got to explore: is this a real approach that's coming in? You need to really start sharing some information. You need to understand what the initial offer is. You need to go through negotiation skills. Is the team really that you've got in the company able to deal with that, to think that through, to handle it, to not drop the ball, to get to actually a legal point of view? When you go through the legals with the share purchase agreement, and then actually think about sort of the post-deal piece as well. For most of the investors, hopefully that's you'll sort of move on with the signing of the contract, but from a staff and manager perspective and directors that carry on, perhaps in a trade sale scenario, you've got to think about the post-deal aspects of that as well, and things like earnouts as well. So when I think of an exit, it's that whole end-to-end process, right? So it's not just something that comes easily. I don't think for any company exits come along too often. So, if you're involved in a board and you have an opportunity for an exit, it's a good chance to really have a long, hard think about the situation. In terms of timing, if you're going through a classic business, I think I think of the journey I've been on as a journey, right? Different investors have rolled into the company at different stages and rolled out of the company. People can get exits at lots of different steps within the business. You tend to read about the successes. You don't read about the majority of people. The majority of businesses that I think take a lot longer. It's a lot harder work, requires more investment, but they do get an exit. They do get a return. And there are obviously the ones that don't make it that nobody wants to talk about. In terms of the journey from Rocket Root's perspective, we took seed investment. We took a small amount, less than 500,000, from seed investors down here in the south. Without that, we wouldn't have got started. So, fantastic for us. I'm not going to go into too much detail around that in terms of the dynamics, but it really got us going. We're able to get into the market. We realised that the amount of money that we required wasn't going to be enough, and we found ourselves in this sort of chasm space. People talk about it. For us, we weren't actually at a new valuation point. We couldn't raise more money. We basically had to make things stretch. We had to make every pound actually equivalent to £3 in terms of how we were working. For us as founders, we went through a period of not working for salaries, but the seed investors were understandable. We put in an option place, a scheme in place that actually supported that. During that period, aviation is a passionate industry, and I would say again for founders and for investors, you need to align yourselves. If you're in aviation, the people who invested in our company understood aviation, and I think same goes for investors. Invest in stuff that you understand. During that phase of crossing the chasm, and we actually came up with a customer of us called us up. Loved the product. He happened to be an entrepreneur himself, multi kind of wealth person, very private individual, and said, "Look, I'll give you some cash. I love the product." And he also brought his energy, his passion to us, and really got us through that chasm. And he provided a bridging perspective, and through that bridging, we then got onto a new valuation point. We took a new valuation milestone. The business was growing much faster. The product was much improved. A lot of bugs and issues that we had at the initial stages were out of the way. And at that point, this investor really liked the business. He wanted to get it up to about 40% ownership in the business. That was his strategy. He wasn't in the space of investing off of PowerPoints. He wanted to see something that was proven had a product in the market. And at that point, the angel investors were offered the opportunity to exit, and majority of them took it. Some of them were actually less than 3 years into the EIS and have rolled on and have carried on in our company. But at the moment, angel investment is less than 3% of the company as we are at the moment. And then from that energy, that extra capital that came into the business kept us going. And we got to the point that actually we started to get some inbound inquiries, some approaches come to us from businesses, and we actually secured also alongside that some additional capital from BP Ventures. Really loved the business. They like the fact that Rocket Root saves fuel when you're flying around the world, and they've got a mission to be responsible in the industry as well, and a bunch of other things about helping them sell fuel. So there was a great strategic alignment that came in with our Series A, and go on from there. A little bit about the Rocket Root story. I would say from an exiting point of view, an exit can happen at any stage. So I know the classic one is you build the company and somebody buys it and you go off. I think for Rocket Root, the nice story here has really been the angels have been able to exit earlier. Okay, coming on to exits from a business or strategy perspective, I hear kind of quite often conflicting arguments. Build the company for an exit. Exit is a distraction. I think from an angel perspective, you're managing a portfolio strategy. you want companies to build for the exit. I will say that this investor that came in, that got us through the bridge, he took the pressure off of the exit. He said, actually, guys, if you need 5 years, get on, just focus, build the best product. That's all that he was interested in. And without that pressure, we were able to change our strategy, just sort of pace things out a little bit and go a bit longer. I'm not saying exit it was a distraction. It's always been there at the back of our mind. We've always been thinking about who's to be involved in the company. But I would just say any business that you're involved with, whether you're on the founder side or on the board side, there's this sort of distraction in it, and it's wrapped up also in the shareholder agreement and in the commercial agreements that you have between founders and between investors as well. I would say at the early stage it's good to keep it involved, but at some stage you need to realise that the company needs more time, and you shouldn't be pushing as hard for an exit when actually it will come. And as I said, from my perspective, I had no idea that we would be where we are in 7 years. So when it all comes together, right? So as a founder, you're in your cave, you're working away, you're trying to improve the product, you're trying to get more customers, you're trying to convince people, everything is fantastic. And guess what? You're a tiny fish, right? Actually out there in the aviation space. There's multi-billion-dollar companies out there in the space that we're in. There, they've got massive R&D teams, and actually, we're kind of for a long time just got getting on with the segment of the market that we're involved with, and then actually you start to get noticed by some other people, and things start to happen. The product's really great. Customers are saying it's fantastic. The growth is up, the revenues are up, the costs are under control, and at that point you're like, oh my god, right? It's sort of coming together, and actually at that point, believe it or not, until that happens, I think you'll struggle to get an exit. Unless you've got some fantastic IP that somebody wants, doesn't really care, or they want the team. If you're building a business and you want to sell that as a block, as a business, you need to get to that point where it all comes together and actually great things happen, and the press likes you, customers like you, investors like you. Recommendation is really to become known and understood. If you're looking for an exit, nobody is going to know about you if you're under a rock, down on Bournemouth Beach, for instance. My best advice is the people that may buy your company in a trade sale, they need to know who you are. They need to know that you are out there. They need to know that you're going to be causing them a headache in 3 years' time. And actually, if you can not disclose everything about your business, but be intelligent in how you're sharing information out into the market, they will come and they will start to understand you as well. And I think that's an important part for the board as well in terms of an exit strategy. It's not a case of let's just go out and get an exit. You need to nurture it. You need to be out there building those relationships, building those partnerships if you want to get a trade sale. If an exit comes along or approach actually comes along, this is a great test of the board. If you've gone through different investment rounds, I think of investors like sedimentary rock in terms of each one that's come along has sought to change the shareholder agreement and put different layers, different things in there. Actually, you have an offer that comes along, gives you an opportunity to get your spreadsheet out and assess, did you maximize your upside and minimize your downside as an investor or as a founder. It's also really a test of, is everybody pulling the same way? As founders, do you want to carry on with this business? The people that want to buy you, or do you want to kind of carry on doing your own thing? Do you want to put more investment in and build it to be bigger? If there's any fractures in the board, they'll come out. And also from a negotiation perspective, I think if you have an exit that kind of comes towards you, or a negotiation or an offer that sort of starts to come towards you, do you really have that skill set in the board to be able to do that? And do you actually assign roles to people within the board? So, for us, again, we've ended up in a very interesting scenario where we've got a VC involved, we've got a high net worth person, not himself, but his his investment director who's on the board, and then us as founders. We've come through, interesting opportunities. We've played different roles, where one's been proactive, one's been negative, and that's enabled us to evaluate what is really this offer. Why are they really offering this for the company, and do we think that's a fair price or not a fair price? So I would say, if you're at a later stage where you think you're going to be heading towards offers and exits, really have a look in the board and think about who has the skill set, who basically is going to hold this through that long process, which could be 9 months, or it could be at least 6 months to 3 months, and not drop the ball to kind of get it across. Negotiate well would be another kind of observation. That doesn't mean just push the price up. Again, understand. These offers, I don't think, come along very often for any company. So you want to push the price and create value. There's an opportunity to really improve the return through negotiations. But you've got to be pretty ballsy to do that, and know what you can, know where your limits are, and also know what Plan B is. If the other party says enough, guess what? We've taken it with our board. We're not interested, or we think actually come back in a year's time. You better be clear what your Plan B was. So again, you need to be really, really, really organised about it. During that whole discussion process, I would say the company is in a shakedown period. So if you've got any weaknesses in the balance sheet, if you've got any demands for cash flow, if you've got any product issues, customer issues, you better make sure all of that's out the way, because you don't really want to find yourself in a situation where you're trying to explain things when you might have lost a customer, or actually, you need to get some more funding while you're at the same time trying to talk up the value of the company. Legals, as said before, legals from a founder's perspective, they're like a ball and chain, trying to hold you to account, and I understand that. That's the role of them. You tend to put a huge amount of effort into negotiating them, then you sign them, put them in a drawer, and forget about them. And then actually, when something like an offer comes along, actually let's dust down this shareholder agreement. What really are my rights? What can I really do with this? And I'd say again, having good legal involved to help you through that process is essential. So, in summary, if you're waiting for an offer, my advice to investors is really keep focused on the business. If you're hoping for an exit, chances are it's not going to come. You've got to focus on the fundamentals, build a fantastic product, build a fantastic customer base, get yourself out there, get known. If you're an investor in a non-exec capacity, or not even in a non-exec capacity, I would just say positivity. The one learning point I would say from this investor that came and got involved with us, he brought unbelievable levels of positivity to the company. And you're trying to do hard stuff, and you're in a hard spot. If you're surrounded by people that are just piling on the pressure and negativity, it's not where you want to be. You want to be in a spot where you've got everyone hoping for the best and being proactive to make the best there. Back to building, relationships, as I said as well. Get out there to figure out who the people are that might be doing exits, and make sure that you're out there. They know who you are, you know who they are. Go to trade shows, be vocal in the market if you've got something to talk about, and also assess market activity. If you see your competitors being bought up, there's a shelf life on what you might have, and it's all about the timing, all about the coming together piece. It might be that right now your competition is low, but you're ahead. You need to really assess where you are in that cycle, because everything is fluid and changing, is my observation. If being approached, I'd say take pride in the achievement. It's a validation of your investment. It's a validation of really the team. I would suggest to get organised ASAP. You want to be responsive. You don't want to be hanging around for 2 weeks to deal with it, and just try and play it cool. I'd say get organised and get a strategy together. Try and bring everybody with you. I think any exit, it's about bringing everybody that's committed to the company. 7 years on, I'm 7 years invested into the company. I know, shareholders and investors have brought money to the company. This is about, everybody's done their time, right? This is about getting value, getting an exit, and getting a return for everybody, and really work up the plan B scenario, because that offer could walk away, or it could be dropped at a moment's notice. Final footnote for angels listening. Again, I'd say non-exec role is a really interesting space to be in. It's a great way for you to be active and proactive in the company. I just implore you to always be as positive as you can with your investments, even if they're in a tough spot. And I would say there's no point complaining at the end of the day. Stay involved and be informed every step of the way. And that's it, really. Those are my perspectives. I'll just say thank you very much, and that's it.